Lonmin is the final one. We could have talked about Northern, but we decided to go straight to Lonmin because, you know, some people like to put their heads inside of a crocodile when it comes to investing. Remember, this is the Marikana mine. Lots of production problems, lots of labor-related difficulties. It had a number of emergency rights issues. Ben Margara, the CEO, stood by their strategy and argues that there's still value here. Market capitalization is how much? 3.5 billion. That's not a lot. It's come down. Let's look at the share chart. No dividends, no PE. Yikes, that is a tragic looking share chart.
Yeah. Now, I don't know whether the data is right, but this is the data I've taken from the JSE.
Yeah.
With all the discounts and the rights issues and everything, it's now trading at 12.50 Rand. Guess what the high was in rands? What was the high before all?
I'm thinking like about 1,000 Rand if you go back.
Try 6 million.
No ways.
Yeah. Now, as I was saying, the data
so if
might
you
be
unwind
wrong.
all of the extra
data might be
issues.
wrong. According to the data on the JSE, the higher the price was 6 million Rand a share, and it's now 12.50 Rand.
Yeah, because of all the dilution
all
of the emergency
massive
issues.
Okay, now, it's a terrible, it's probably not the right thing to say, but Lonmin should have been closed. They shouldn't have had the rights issues.
The rest of the industry would have loved that.
Yes, because it would have saved everyone else, but of course they got the capital. I certainly wouldn't have put capital in, because whoever has, you can see the share price has not been rewarded for this. So, in other words, this is the most marginal out of all the listed players, by far the most marginal.
Because the 3-year chart that you asked us for shows that even more precipitous collapse.
Yes.
Yeah, so the chart has to get worked back. So, but if you were of the view that the platinum price was about to explode, and
you'll buy this or
yeah, because it's the one that's at the bottom. So this one is the one that'll go up the most.
That'll go up the most. Now look, they have really had an incredibly difficult time there. They seem to be coming right. The management is cutting costs a little bit. They had production issues for the couple of months, but the last 2 or 3 months they've actually got their production right, and they've got the production up. So once again, they're actually profitable at this level. And when you look at their cash flow since the last rights issue, it's actually neutral. So in other words, they're not destroying cash or destroying value, which is significant. Of course, platinum price falls $50, they're destroying value.
And if you're a buyer in the market of the shares now, you don't care what happened to the preceding shareholders who all got obliterated. That's their problem.
Yeah, you don't care at all. But it is the most marginal out of all the companies we've spoken about.
Okay, but hot or not?
No, I'll go not hot.
Not hot. And if you were a very risk-tolerant individual and you like this setup, would you rather buy Stillwater Sibanye or would you buy Lonmin rather?
I'd rather buy Stillwater, because the palladium
thing.
The palladium in the next 2 or 3 years looks a lot better than platinum.
Good. Well, there you go. So that is interesting. And as I indicated earlier, we own a few Stillwater Sibanyes in the international portfolio. No, the local one.